And when you talk to people in Washington, do you get any sense about whether there's really going to be forward movement on infrastructure?
I would characterize it as slight optimism, and the devil's always in the detail. It's always in the funding. All the stuff that Kevin was talking about is just noise around the edges. It's been about funding since 1993 when the gas tax was last raised. But a larger pool of money, make all of these details of, okay, I can do some private public partnerships here, I can do some asset sales or repurposing. If there's a bigger pot of money, I think all those things are part of it, but it all comes down to, do we have the political will to raise the money? Because it has to come from somewhere.
Well, and that's my question. Where does it come from? Because you've got three different pots, right? One is the federal government, one is state and local government, one is private, right? We hear some private funds like Carlyle and other people say, we've got a lot of money we'd like to deploy. We hear from the states and local governments, we don't have any money.
Right. Private investors have raised a lot of money just in case this comes to pass. States, though, it's interesting. 24 states have raised their gas tax in the last 3 years, which means they weren't afraid of making a hard decision to meet the needs. But what's constant in this for Democrats and Republicans is there's a $2 trillion need in the country. And everybody needs to coalesce around that and then get the political will to figure out how to solve it. The other way to do it is to take it from other priorities, which isn't that palatable either.
Well, talking about taking away from other priorities, there also is a rhetoric in the market that if you do wind up having some money coming in from the government that's going to take workers away from you, it's going to take money away from you, it's actually going to make your life harder. Is there any validity to that?
I think there will be some wage inflation because there is a shortage of workers right now. So just the ability to get a big infrastructure spend out into the field could be difficult. But, you know, tax reform and whatnot, it's going to raise, hopefully, it's going to raise GDP from a 1.7 rate to a high 2 to maybe in excess of 3. And I've heard higher numbers than that. That should allow, you know, should flow efficiently through the economy as well. And for our company, I want to be clear, 17% of our revenues come from infrastructure. That means 83% come from a good economy. It's much more impactful for us to have a 3% GDP, for instance, than a significant infrastructure bill.
A really important point. How interested are you in immigration policy? How much could that affect your business? Because we hear that a lot of the immigrants, including the dreamers they're talking about, actually work in the construction trades.
Right. It's very interesting. As a public company, we employ only legal immigrants, so it really doesn't affect us. In some of our downstream customer base, though, where there is a lot of immigrant labor, I think it will be a little tighter there. But for us, you need special skills to drive a ready-mix truck. You have to have a commercial driver's license and whatnot. So we have a difficulty in finding trained drivers.
So to pivot off of that again, just to hit on your mention of wage inflation, what are your unit labor costs looking like right now?
Well, we're growing at about 3% a year, and where we're very short on drivers, we've had to give additional incentives. They'll bump that up to about 5% where there is a shortage.
And if it's 3% now, what's the speed you think that we'll see that rise, say, over the next couple of years?
I think it will probably 3 to 4% over the next couple of years, depending on how big an infrastructure bill can generally be accomplished or how heated up the economy becomes.
Can you pass that on?
Yes, absolutely. It needs to go through the entire value chain.
We have a viewer question here over the IB, basically asking, is wage inflation actually a good thing? And in fact, would you rather have a raise in the minimum wage or have it grow organically? Which is healthier for you?
Well, for us, we don't pay minimum wage because our wage rates are elevated from that because of special skills. But I think planned, progressive, slow inflation is good for the entire economy.
What about the skills gap that we hear about repeatedly? You say you have skilled workers.
Yes.
Who trains those workers? Are you training them? Are they getting they're training somewhere else? Do you have a tough time finding skilled workers?
Very interesting. We have a difficult time finding trained, qualified, ready-mix truck drivers, and the schools and the trade schools really only give us a minuscule amount of our driver pool. So we're having to do a lot more self-training, bringing people that don't have skills, putting them in apprenticeship programs, putting them with a mentor to teach them how to drive and have to build it from the ground up.
So that's kind of your input cost when it comes to labor. What about your input cost for material? Because we heard potentially proposed tariffs as much as double digits on steel and aluminum coming from 2 to 5 countries.
Right.
What is that? If that happens, what does that do for you?
Well, it won't really affect concrete. We have enough cement, domestic cement capacity right now, and our raw materials are local. They're rock, sand, and gravel. So the tariffs aren't going to affect
But what about
us,
rebar?
Rebar would affect our customers, but not concrete producers.
Oh, I see. I see. When would you be impacted by tariffs? I mean, just in case we have like a trade war, China ramps up the rhetoric.
Yeah.
Like, how does that affect you on the margin?
It's still, I find it a remote possibility that it's going to affect us as domestic producers.
Mm-hmm.
Are you concerned at all about inflation at this point?
No, not at this point.
And does it bother you the size of the deficit that's being run up by Congress?
Over time, it needs to be addressed, but hopefully a growing and expanding economy can bring in more tax revenue to lower the deficit.
And to end sort of on a broader macro question as well, how do you see U.S. growth over the next year?
I find it accelerating again. I think the policies that have been put in place over the last 12 months are very beneficial to growth. The tax policies, I think reduction of regulatory burdens, all will help us grow at a faster pace than we have in the last 4 to 8 years.
Because the rhetoric is the second quarter may be the best we're going to get. Like, it's going to kind of peak out there, and then growth is going to be harder. But from where you sit, and demand for infrastructure, demand for housing, you're not seeing that.
No, our backlog is very solid through the next 4 quarters and into 2019.
Is there one area where your backlog is weaker?
No, I'd say it's uniformly elevated in all of our markets.